Good day everyone, it's David Paul speaking. It's 10 o'clock on Wednesday the 7th of October, and I'm just doing a short video to complement my weekly essay, and you should be getting this on the morning of Saturday 10th of October. So that's the situation on VectorVest on Tuesday, at the close on Tuesday. A very positive situation. As you know, the American market sold off significantly on Tuesday evening based on a comment stroke tweet from the President of the USA re stimulus. So we're going to have an exciting day ahead of us. So I'm doing a talk at the VectorVest Summit, and that talk is on Monday the 19th of October, and in the essay this week I've actually talked you through what I'm going to speak about. Maybe that'll help your understanding, and in this video I just want to actually illustrate the power of the stochastic indicator to in fact pinpoint exact entries in a trending stock. And I want to talk in particular about the concept of stochastic reverse divergence, which seems to perplex an awful lot of people. So I want to go to the viewers, and I'm looking at a share called Clipper Logistics. Now, this was brought to my attention by one of our long-term subscribers, Nigel, some weeks ago. And as you can see, it's undervalued. It was up 7 pence yesterday. And its RV, which is a measure of the price appreciation potential against a corporate bond, is 1.25, which is good to excellent. The RS at 1.26 is nearly worry-free at 1.3. And short-term trend is good. VST is excellent. It's on a buy, and the CI is excellent. We expect it to grow earnings at 14% next year. Now, if I pull up the chart, folks, this is the chart of the share, and I put on my two moving averages. Now, frequently on charts I don't put them on at all because I can just see where they are, but for this I've got the moving averages, and I like to be swing trading in a share where the 21 is above the 55. Okay, and then look for the first pullback after the crossover for an entry. So my use of moving averages is to define a trend. Many people will use them for entry points as well, but I actually use them just to define a trend, 21 and 55. Now, down below, I've got the standard George Lane 14-day stochastic, which is the, in fact, standard on VectorVest. I was taught this by George Lane himself. I went on his course in 1985, might have been 86. He's long since departed. So the stochastic is normalized between 0 and 100, and below 20 it's said to be oversold, and above 100 it's said above 80 it's said to be overbought. The stochastic provides very good signals with the trend, folks, awful signals against the trend. So if you've got a strong trend up the page, we are only looking for buy signals from this. It doesn't, as you can see, it's over bought up there a dozen times, and market just keeps steaming onwards. So it needs to be traded with the trend, in my humble opinion. Now, that was a buy area when the stochastic went below 20, but the most important facet of this is in fact called reverse divergence. And reverse divergence was first noticed by a fellow called Andrew Cardwell, and George Lane himself had not noticed the reverse divergence, but it is a leading signal of change, and it's simply the price makes a rising bottom, but the indicator makes a falling bottom. That's the divergence. The price is rising, the indicator is falling, and then when you get the crossover on the stochastic down here, it precipitates and is the leading indicator which predicts an explosive move. And since that signal, if you'd got in at about 3, it's gone to 5. I think that is an explosive move since July. So that is a very simple way of pinpointing a very good trade. Now I'm going to walk you through 10 points on the 19th. I hope you're going to enjoy the talk, but I'm also doing later on in the year a 3-part swing trading course in UK and USA shares, where I'll go into this and many other techniques in a great deal of detail. So you wait for this to get down here with the reverse divergence and you buy it somewhere around here. Use the VectorVest stop loss, and if I put on the stop, there was the VectorVest stop loss somewhere down around here. Now, when you've made as much as you've risked, and I talked about that in detail at the last Q&A, and I've written about it, and I'm going to talk about it again on the 19th. But when you've made as much as you've risked, in other words, the risk is the difference between the entry point and the VectorVest stop loss. When you've made that, exit half, get your stop loss to entry. So you've now got half running and you can't lose any money in that half. And then do your best to let it run. If you'd bought there at about 3, you've taken a profit on half the position, got your stop to entry, and you would be still running that position. Okay. And that's the methodology I'm going to talk about on the 19th. It is just one version, and you could certainly add a great deal of trading ideas to that yourself. You could let the full position run. That would be in fact better in this case, but it would be worse if the market in fact had gone against you. And of course you could add to the position as the position's moving up the page. All sorts of different management rules, and those have to be a part of your own unique trading plan. In this environment, I found taking off half when you've made as much as you've risked has worked exceptionally well, especially in the volatility. And in the run-up to the American election, I feel that that volatility is going to get worse rather than better. And we got a really strong example of that over the last few days, where Mr. Trump went into hospital, stock markets tanked. He came out of hospital and stock markets ran strongly, and then he tweeted about the stimulus last night, and we fell through the floor again 60 or 70 points in 10 or 15 minutes. So a great deal of volatility. I don't think that's going to go away for a while, folks. I'm hoping that if you read through the essay, maybe print it out, and then when I'm speaking, if you've got time to listen, then you can make some extra notes in there that hopefully will help your understanding. Please register for the summit, vectorvest.com/summit, and it's 3 days of outstanding quality education, and it's all free. Thanks very much.